So what we have today, guys, for anybody who is trading futures, we're going to pull up the ES. This is the S&P 500, and this is the 5-minute chart. Now, this morning, I was able to take a pretty nice long position here for just about 10 points on ES, and this is a pre-market trade. Now, the reason I wasn't too confident to hold it longer is because it was pre-market. Whenever we have a pre-market trade on ES or NQ, we're missing out on a lot of volume. Most volume comes into the S&P 500 and the NASDAQ when the New York Stock Exchange session opens. That's at 9:30 a.m. Eastern. So the trade I took here was at 9:10. We still didn't have that open just yet. So we have a supply zone here, and I saw that on the 15-minute time frame. And what I see when I see a supply zone is I want to use that as sort of an area of resistance. So when price moves into here, where a lot of people might be trying to take a long position up here, and if we play a replay system and we turn this and got rid of this drawing, well, not for nothing, this looks like this is going to pump. We're going to continue. We're going to go long. We're going to go towards our open price. But what happens? We reject and we stay range bound. Now, how could we have found this range? Well, there's a few ways. We could use supply and demand like I just showed before. And that would be with the 15-minute. We would look for some type of basing candle and then a move lower. Now, some people call this a supply zone. Some people might consider this as an order block. Whatever you want to call it, we want to find it the same way. It was a point of consolidation. And if we even look left, we see that we consolidated in this zone for quite some time. And then we have our impulse move away from it towards some other area of support or resistance. In this case, it was to a demand zone. So how did I know not to take any longs at this point? Well, not only were we in a supply zone, but at that point too, we were just creating the high of our 15-minute opening range breakout. So with everything lining up sort of in opposite directions, this is a no trade zone. Even though, yes, possibly we could have taken some shorts here, we really don't want to be guessing when it comes to the market. We want to use tools like order flow. We want to know what our technical analysis is telling us, and we want to be able to follow our trading strategy. So I like to use the orb and supply and demand, and I also do like to use the gap fill as well. But if we looked at the gap fill today, and here's a quick trick for you guys too on how to find the gap fill on futures like that. So the first thing we're going to do, we're going to come out of replay mode. And right now we're on the 15-minute time frame. So usually we could scroll back. We could look to see where this is on the 15-minute time frame. So we're going to look for the 345 candle and see wherever it closes. And that's going to be our gap fill price. Now, instead of going back and trying to hover with our crosshair and looking for it, what we could do is we could come down to our bottom right on TradingView, or if you're on a different broker or trading platform, what you're going to be doing is turning off the extended or electronic trading hours and setting it just to the regular trading hours, which is the New York session. Once you do this, what happens is it gets rid of all that extra time in between. So I'm then able to find my 345 candle that much quicker. So this was a huge, easy, quick way to find that. And this ended up working as a key level too. When price opened up, some people like to use the gap fill as a price target. But we see that when price opened right here at 8:30, we were opening on that gap fill. So that disqualified the gap fill of any kind of relevance. Now, I do want to point out, and let's mark out the gap fill from the other day, because I want to show you guys a really great trade I wasn't able to take, but I was able to recognize. So here is let's find we're on the 15-minute one more time. We had our 90-minute supply right here. And here we have our gap fill. So here's our 345 candle was green. This is where the 345 candle closed. This is our gap price. So now if I turn my extended electronic or extended hours back on, I notice the gap fill price lined up exactly with my 90-minute supply zone. And what happened that day? Well, look at what happened. We opened below where I wanted us to. And the reason I mention that is because I use a statistic-based platform like this is called Edgeful. And I would look at the ES, and the price action report I'm looking at would be gap fill. And what it does is it sort of tells me what are the odds and what are the chances of this gap filling. So I see for session, I'm going to set it to New York. So it's 9:30 to 4. And for this, I'm going to go, instead of standard, I want to go by size, because then it's going to tell me, are the smaller gaps getting filled more frequently? Are the bigger gaps getting filled at all? What's going on in the market? And it also shows me streaks of these gaps as well. So this day right here, I wanted us to open at this price level, because then our gap price would be, let's see, I think it's 0.39, right? 0.38. And when I use my statistic-based platform and I come to buy size, I could choose, well, it has 0.2 to 0.39. And I saw that a gap down, it fills about 56% of the time, almost 60%. So odds are in our favor. But once that size gets a little bit bigger, that's when it really stops filling. So that's why I really wanted us to open up here, but price ended up opening much lower, giving us a larger gap. We ended up finding demand and reversing later that day. We ended up getting that gap fill along with the rejection of my supply zone. So this is a great trade. Unfortunately, I missed it because my trading hours myself are between about 8:30 to 11. So if there's any other moves or anything else going on afternoon-wise, I'm usually not hitting those. And that's okay. We have to be okay with everything in the market. We're not going to win every trade. We're not going to lose every trade. But as long as we create a system that we stick to, that's what will keep us prospering as traders. And the reason you guys see right here, I have the opening price, is because I could use that to my advantage too, to get an idea of if we're bearish on the day or bullish on the day. If we're above open, then obviously the daily candle is going to be green. If we're below the open, then our daily candle is going to be red. And as traders, we don't want to fight that trend. We want to trade with the trend, because the trend is our, and you guys know it, friend.